Stoltzfus, chief investment strategist for Oppenheimer Asset Management, which has $52.8 billion under management. John, you're one who says tune out the noise.
I do, believe me, say tune out the noise. I think that when I look at this today, I would say focus on the peace deal in the Middle East and what it means for the Middle East and for the world, okay? Related to this with China, this is a long-term thing going on, and it just happens that regrettably China has taken a course of action that is so unfriendly after for years investors from the West and non-communist Asia have invested in China, and China has rightfully taken advantage to build its economy, but to now revert to hardcore action, very unfriendly situation as this is, I mean, related to business, okay? Yeah. Is not good, but I think it's mostly a reaction from trading desks. My viewpoint on this is that investors could likely see this as an opportunity to buy babies that get thrown out with the bathwater. And you showed a few babies that got thrown out with the bathwater. I can't name those names because I manage money and the firm doesn't like me pushing my own stocks. But I couldn't help but think, you know, people who missed some good names just a few weeks ago or a few days, just the other day when we hit another record last.
Look at the chips here. We could look at some of the NASDAQ losers, but the chips. So NVIDIA, which is interesting, hit a record earlier in the session, intraday. But then, of course, it turns out that China is actually going to launch a customs crackdown, even worse than what it has implemented on NVIDIA. The timing is so questionable. What with the NVIDIA headline and the rare earths, got another 5 of them added to the 7 that were already there just within the last 24 hours.
Well, I won't disagree with you in terms of the shock value, particularly to traders and leveraged investors. But for individual investors that are intermediate to long-term investors, and I don't mean many years out, but 2, 3, 5 years out in their goals and objectives, this, along with their financial advisors' help, could very well be a point where you want to look for opportunities. For example, with the chip sector generally gets hit fairly hard. It's a volatile sector on any kind of news that's worrisome. But there's been a lot of advancements through the deals that President Trump has made related to building chips in this country that can be probably tied in internationally to getting imports from different places, from the big companies, both in Europe and in Taiwan.
I mean, we just showed Broadcom. Broadcom is 4.8% less expensive today, and there were a lot of people who felt like they missed out on that opportunity. Well, it's cheaper today, folks. Not to mention the broader market, as you say, S&P down 2% at the moment. I'd say that's a bargain.
Yeah, just the S&P alone, as I mentioned, the S&P year to date, just this afternoon before I got into the car to come here, the S&P up 12.46% year to date. Now it's taken a bit of a haircut from the point of where it was from the lows of April 8th. The S&P was up 32.78%. So it's time for a haircut. It's a trim. It's a little bit more than a trim, perhaps a haircut, but it could be that stocks are small sale. This isn't one of those store-wide sales.
And on this Friday, we want to flag our viewers that next week, earnings season, third quarter, really begins in earnest. The expectation for the S&P 500 is that earnings will rise 8% year over year. I mean, that is impressive, and that would basically be the 9th straight quarter of year-over-year earnings growth.
And that's a great thing. And if you look at it, we've had so far just this year and what we've seen, fourth quarter of last year, which is reported in the first quarter, of course, of this year, was positive. Same thing for the second quarter. Good chance for good numbers on the third quarter. What has come in thus far with very few companies coming in so far, with the big banks not yet reporting until next Tuesday, what we see there very clearly is earnings are positive. You got a little bit over 9% growth in earnings growth in the third quarter so far.
Well, if you didn't like a loss of 2% a few minutes ago, now the S&P is down 2.2%. We are at session lows right now for the Dow, S&P, and NASDAQ at the moment. It's the NASDAQ that is taking the biggest hit. That's why we have switched out the bug on the lower right of your screen. John, good to see you.
Great seeing you.